I was inspired to go to the Berkshire Hathaway AGM by none other than Rajeev Thakkar, CIO and Director of Parag Parikh Financial Services or PPFAS Mutual Fund. And frankly, we can't talk, Rajeev, about Warren Buffett without talking about Charlie Munger, right? So I want to start off your conversation by talking about how crucial was that partnership to your mind for Warren Buffett himself.
So in the structure that Buffett and Munger ran, which earlier the partnership and later on Berkshire Hathaway, there like they would pay taxes on transactions. So every time they bought and sold something, they would end up paying the capital gains tax or whatever taxes applied. Now, that is inefficient in terms of compounding. There's leakages all along. So when one moves to the great businesses at fair price and extends the holding period for long, that results in a significant bump up in the post-tax returns for the structure that they run. So this may not apply to every kind of investment vehicle out there. So some investment vehicles or some entities are tax exempt. So those people can afford in and out to some extent. But in their circumstances, I think it was very, very significant. The returns would not look anything like what they look today if Buffett had not made that shift on Munger's advice.
Rajeev, is Warren Buffett's style of investing replicable today in an age of AI and algorithmic trading? I asked the same question to Ramdev Agarwal as well. Can a buy and hold forever strategy still generate that kind of alpha?
So the principles definitely apply even today. The specifics may not apply. So Buffett was a great fan of investing in newspapers, for example. Now, in an era where people get their news on the internet or through social media, it may not be that great a business. But some of the things that he had said decades ago, those lessons are being learned by people all over again today. So this people talk about this lifetime value of a customer and cost of acquiring a customer and how losing money in the first year may not be a bad idea. This is spoken about long back in the context of Geico, where in the first year they would acquire a customer, they would lose money on that customer. And he was all for it, and he did not look at the reported earnings numbers for that period, but looked at the lifetime value of a customer. So that thing has been there. He spoke about newspapers. He spoke about survival of the fattest or the double-side network effect in a newspaper, where the largest newspaper has the most readers, most advertisers, can attract the best talent and all that. And we are seeing that in network businesses like ride-hailing and the like. So those principles can definitely be applied. I think the buy and hold forever, he's spoken about that in aspirational terms. So if nothing needs to be done, don't unnecessarily churn the portfolio. But in his own investments, there have been occasions where he has had reason to exit positions, sometimes very, very quickly, and sometimes when valuations became excessive. So I think that's an aspirational part. I don't think one needs to take that very, very literally in one's investment decisions.
Okay. Now, Rajeev, Warren Buffett missed the India growth story largely. But do you think his principles work in a market context like India?
So Buffett himself was asked about global investing. So his thing is he invests in companies which are listed in the US but have businesses all over the world. So for example, he mentioned Coca-Cola, where Coca-Cola has operations all over the world, and it does not just derive its revenue from the US markets. Again, Apple was one of his big investments, which again benefits from global growth. So if one looks at investment returns, US and India have been standout markets in that sense, and sometimes US does better, sometimes India does better, but both have delivered strong returns in dollar terms. The principles obviously apply in India. So Buffett is, of course, a celebrated investor in the US, and he bought things like Moody's. And in India, a celebrated investor like Rakesh Jhunjhunwala, apart from other investments like Titan, is also known for his big investment in CRISIL. So principles remain the same, like Borsheims in the US versus a Tanishq in India. So those kind of things replicate across borders. I don't think principles change when markets change.
Okay. Is there a void that Warren Buffett's exit creates in investing, in life, in Berkshire Hathaway maybe?
So I think what his exit means is Berkshire is now a conglomerate like any other. And despite his preparing for the exit for many decades and creating a succession plan and getting a set of able managers, without him around, I think that premium associated with him goes away. And like he would be the first port of call at the time of any financial crisis, or whenever people needed some guidance, or if he invested in something, people would see that as a sign of stability. I think those things go away. So if you read books around the global financial crisis and how he invested in preferred stocks of certain financial companies, and that gave this perception of everything is not as bad as it looks. I think that kind of capability cannot be replicated by someone else.
Okay. And Rajeev, can't wrap up this conversation without asking you, what is your favorite Warren Buffett memory?
So this is a personal one, nothing to do with investing. So 2011 is when this happened. So 2011 was when I was attending the Berkshire AGM, and that was the first year where Buffett said he will, on the next day of the meeting, be at the Borsheim's store, and he'll be selling jewelry over there. So a lot of people go for the AGM and leave immediately after the AGM. I went to Borsheim's on the Sunday after the meeting, and that was the first year. And although crowds definitely were there, but it was not as crowded. And being the first year, they hadn't figured out that freeloaders like me also will end up visiting the store. People who will probably not end up buying jewelry, but one could walk up to him, and I got clicked in the same frame as him by one of the local newspapers, and that was the front page photo on Monday morning. So that was an interesting story. That
What a lovely story. Thanks so much for sharing that, Rajeev, and thanks so much for being with us today and giving us those thoughts as well. Viewers, you might think, why is it that spending the last 30 minutes of India Market Open on the last day of the calendar year is so important? Because it is Warren Buffett, because he's that important an investor on the world stage, and because his teachings will stay with everybody who's followed him through life. I urge all of you who may not have, if you haven't read a word or a shred on Warren Buffett or Charlie Munger or both, to please make it a point to do that in 2026. Believe me, your life will get enriched. With that, it's a wrap on India Market Open. Up next is Ask Profit. Thanks so much for staying tuned to us.